You're listening to the Money Dad Podcast, practical financial and business conversation from a dad who knows money. I'm April Adams, and please welcome my dad, the Money Dad, Robert Adams. I've been wondering something.
What's that, April?
When you die, how much money am I getting?
Well, you better wait till I die first.
You're assuming he's going to die first.
I know, after this conversation, I might be the first to go.
Well, how much are you expecting?
I really don't know.
I hope it's not much.
Mama will give me some.
Bless your heart. Well,
You know, if the Gamecocks just did better, his sports betting would have
really be good. So, you started that, so let's lead on into a couple things. A lot of people will ask me questions. What do I do about life insurance? And there are so many life insurance products out there. So I'm going to take it from a backwards point of view. I'm going to tell you what not to do with life insurance. Number one, do not buy life insurance to invest money. Here comes an example, April. We always have examples. So back in 1984, when you were born, that's right.
Wow.
Life changed. We had a baby.
Did.
And you came into the world. And the world stopped for 30 seconds, and then it decided to continue on. And I said at that time, I said, Rhonda, we need to have some life insurance in case something happens to us to pay the bills. And a friend of mine come down and said, I have this product that you can pay $32 a month, and you can pay that over 30 years, and it's going to grow, and it's going to grow, and you're going to have so much money after these 30 years. And since I knew him and I wasn't too smart on life insurance for my $50,000 worth of life insurance at $30 a month, I said, that sounds like a great deal. And by the way, why don't you give my wife a $25,000 policy? That sounds great. So I will jump back to the original point. But as time went by, as I got older, the cost of this insurance increased.
Oh, it was no longer $32 a month?
Well, it was. I still paid $32. And keep in mind, this policy did pay interest. And the interest was always more than what the premium was. And I just kept putting the premium in to watch this thing grow. So after the first 15 years, I'm like, man, this is great. I got all this money built up over here in this policy. I got $50,000 worth of life insurance. My wife's got $25,000. Then guess what, April? 10 more years went by. And all of a sudden, I looked on the back of my statement one day, and the premium had kept going up, that the savings did not cover the cost of the premiums, and it finally hit break even. So instead of trying to continue paying that money over and over and over, if I would live to be 80 or 85, I would be in a negative position.
Oh, goodness.
Because the cost of the insurance will go up with your age. So when I found the break-even point, I sold mine, cashed it out for $12,000. I said, okay, I really didn't lose any money. But all I walked away with after 25 years was $12,000. Now, I did have coverage for the 50, but if you take the 50 plus the money that was put into it, it would have been better off invested.
Yeah.
So if anybody wants to sell you a life insurance policy with savings, I would not advise it. It may be right for some, but those are the things you have to look at. So later on in life, as I started getting into more business ventures and doing more things that I thought was kind of risky, and then I said, my kids are older now. Your brother came into this world.
Yeah, he should
Y'all
have.
now become teenagers. Your mother was working out of the home, and I was getting older, and I started thinking, if I were to die today, how would they make it? So at that point, I had learned a whole lot more about life insurance, and I went out and I found a product that suited me. And it was a level term policy. What does level term policy mean? Term policy. That means that I got a certain face value of life insurance. I signed up to pay for this for so many years, and I only paid one rate the entire time. So, unfortunately for y'all, if I live past March 14th of this year, y'all will lose out on $1 million.
Aw, chats. Actually, I hope I lose out on that.
Well, I appreciate that. Because that's when my term policy terminates. But here was the cool
You
thing.
beat the term, hopefully.
Almost.
Almost, hopefully.
Almost. We ain't quite there yet, but a couple more weeks. I hope to beat the term.
I hope you do.
But at that
That would be a twist ending to this podcast series.
That'd be a terrible twist.
A very abrupt ending. But April would be happy, Zach.
Not really, but that $1 million would console me.
How much of your million would you split with me?
Depends what you need. Let's see, what do we need?
So
Well, you need to get the $1 million first.
I need to check my brakes before I go home tonight. So with all of that being said by Zach and April,
We
I
have a
paid
morbid sense of humor, so we can get through.
absolutely. So I paid, I think it was $2,300 a year. See, how old was I then? 14, 15, okay. At 54 years old for $1 million with life insurance. That's a pretty good price. $2,400 a year for $1 million. But the term means that when those 15 years go by, it's over with. And at this point in life, for those particular 15 years, all of these things we've talked about in previous podcasts of investing money, allowing it to grow, guess what, April? We don't need that $1 million to bury me anymore. And we don't need that $1 million for you to go buy another car. You don't need it. You just don't need it.
How are we burying you?
Well, I heard it wasn't going to be buried at all. I heard that I was going to be burnt.
Mama signed you up for the incinerator. All right.
Oh, yeah, the incinerator.
So anyway, so my point here is they sent me a bill saying your insurance is going to be terminated, but we would like to extend it for another 15 years. How much do you think at 68 and a half that it would cost now per year?
What were you paying?
$2,493 or $2,393
A year?
a year.
Probably now. That number is probably at least doubled, if not more.
I bet it's 3.5 times what it was.
$40,000
A year?
because of my age.
Well,
Remember
yeah.
me talking about the age increase?
Well, yeah, I just didn't think they were going to go that far up on you.
The likelihood that you'll die within this term is exponentially higher because you're older now.
Correct. Correct. So, my two little examples, if you do need life insurance for your family, because if something happens, you do not want to leave them in a hardship situation. But as we talk about budgeting, sometimes we're at a point that we cannot afford what we really want, so we have to pick out what is the most inexpensive way to provide for my family in case you pass away.
Mm-hmm.
And the cheapest, most inexpensive way to do that is with term life insurance. Whole life, universal life. If you're young, please don't buy it, because you can see at 54 years old, I was only paying $2,393 a month for $1 million up until the time I was 68 and a half. That's real inexpensive. Now it's like, well, you lost all that money. I'm glad I did.
Yeah, I mean, that's how the insurance company makes their money.
I'm glad I did, but...
It's kind of funny, though. I just had a thought. The life insurance people, they're trying to get you to live a long time. The health insurance people are trying to put you in the ground.
That's pretty true, April. Never looked at it that way. But to be able to know that your family is at least going to have enough to pay the house off, at least have enough that if the kids need to go to college, that the money will be there, and it did not cost an astronomical amount to have those things in place in case you could not take care of your family. Which leads me to another question that someone has asked. How much life insurance do I need to buy? You don't just go out and buy $1 million worth of life insurance because you want to leave $1 million behind. You want some rhyme or reason for what you're doing. So the way I would suggest purchasing life insurance is, you know what all your bills are, you know all the things that you need to provide for, and it's kind of like doing a budget, except you're just listing down all the things you need to take care of. If you know that you're going to need a new car, you know you're going to need to pay the house off, you know that you're going to have so much money put back to allow you to live until you can work, then all of those things added up, and then add some extra to it, just because you're a good person, that you can just give them that much money left over and know that you can die in peace, knowing that your family's going to be taken care of. And don't be scared to talk to your family about things like that, because now I'm leading into another thing, which is we'll call it high level of estate planning. We're not going to get into estate planning, but I do want to talk about planning for death, not just by purchasing life insurance. And some people say, oh, no, I don't want to talk about that, We're too young to talk about that. No, you're not. Things can happen.
It's tough. I mean, I think the reason why we can talk about it now, and we make jokes and all that, but you started talking with us at a very early age, and I remember not wanting to talk about it for a while. Now I'm fine.
And we've shared that, and that was on purpose, to start calling it, let's say, repetitious conditioning, to let you know that one day, if the cycle is normal, where older people die first, that we're all going to pass away. And when things like that happen, it's not easy on anybody, but somebody has to be strong enough to be able to take things and move forward, such as life insurance, such as taking care of the home, such as knowing how you're going to adapt all these changes, and there must be plans for that. That's why even today, I will tell you, April, here's my passwords, here's my logins, here's the things that I'm involved in, because another thing that I would hate is that I worked hard. I wanted to do something to have for my life as I got older, but if the good Lord decided he wanted me to come join him a little bit sooner, that somebody knew where it was so they could go get it.
The last thing we want is the government taking it.
That's another podcast or 3 right there. No, we don't want the government taking any of it.
Or for 200 Bitcoin to just be on a hard drive at the bottom of a landfill.
We don't
happened
want
to
that
some
either.
poor people.
But on things like estate planning and life insurance, talk to your kids about it when they get older. Don't talk to them when they're 6, but when they start to become teenagers, and just to get them thinking a little bit that you don't want to put them in a state of depression. Oh, your daddy's gonna die. No, your daddy's just not gonna die today. Hopefully. But if he does, this is what we're going to do. And, and we laugh about it now because it's something that's going to happen to everybody. And for all of you out there that think that you're going to save all your money and that you're going to take it with you, you're going to be very, very fooled in the end. And all the things that you work for and all the things that you leave behind, an example of that, April, is your aunt. When her husband passed, he was 40 years old. He loved tools. He was a tool freak. When he passed, we had to go through this storage building that there were some of the same tools that had not even been opened.
I remember that.
And some of them had been used and opened. And 2 friends of ours went through all of that, collected all of it after about a week, went to another friend's house who had a double carport, laid them all out on the carport, 3 saws here, 2 this here, 4 this here. And then the reason we did that is I asked my sister-in-law, what do you want to do with this? And she said, the only thing we can do is sell it.
Yeah.
So we laid it out in this garage so people could walk through there and pick out what they wanted, buy it, and then turn around and give the money to my sister-in-law and her children. My point is not what we did. My point is what meant everything to him meant absolutely nothing to my sister-in-law.
Mm-hmm.
And we have to understand what means everything to us might not necessarily mean everything to the ones left behind. So don't think that what you do on this earth, somebody's going to carry it forward just because you hope they would, but they just may not have the interest in the same things that you had.
Well, and don't try to hold them hostage, because I've seen people do that where they want something getting passed down, or it might not mean anything to the family, and then the people left feel like they're being held hostage by this stuff.
Well, I have seen that even in business. There was a man that I worked for one time who had 2 sons. And the name of his company carried his last name. One of his sons wanted to be a doctor. And he promoted that, sent his kid to school, sent him, through all the colleges or whatever to be a doctor. because he had already planned the life of the other son, because he was just a good time guy. He liked to have a lot of fun. He was fun to be around. He was in a big fraternity when he went to University of South Carolina. But this person had no business in the construction business at all. But his father wanted the name carried on. And I asked his father one time, I said, Mr. So-and-so, I would love to take over from here and help you out. Oh no, my son's going to do it. I'm going to carry on. So his son gave in to the pressure. And he really treated his son unfair. He stuck him in situations without support, and he did not have the mentality or the desire for construction. He was a great salesperson. He could sell, what's the old saying? He could sell ice to an Eskimo.
Mm-hmm.
But he could not run a project or run a construction company. And when his father sent him out on some of these jobs and put him in a position that he did not need to be in, he failed. How did you think his son felt when he lost $1.2 million on his first job?
It's a pretty crummy feeling.
Pretty crummy. But his father set him up for failure because his father wanted the name carried on so bad. So as we talk about that, the things that you want in life, your children may not want them. So don't try to make them do something that you loved and enjoyed doing. I would never do that to y'all. I don't think I've ever done that to y'all. Is to say, oh, I want someone to carry on the business. I had another partner of mine say, well, who's going to carry on your business whenever you decide to retire or involuntarily retire? And I said, nobody. You know, your kids don't want to do this? I said, no, and I sure don't want them to do it because they have no desire to do it. The skills that God gave them were a different set of skills. And that's what they need to excel in their life, not what I excelled in. And do not try to live through your children. My goodness, don't do that. Don't put your children in situations that they will fail just because of your pride that you want to keep the, quote, family business going. And then that leads me over to when I started talking about estate. And of course, you know, as I get older, I chase a rabbit a little bit, but we'll come back. I think it was a pretty good rabbit chase, though, didn't you think? So one of the things that you want to do is even Zach, he's got a house. He's got a car. Zach, do you have a wheel?
Almost.
He does now. He will go get one tomorrow. If you have assets and if you have children and assets, then you need to have a will. As we've been talking about some grim things, they sometimes have been, unfortunately, reality in some families, where even April, your mother and I had a will that if something happened to both of us at the same time and y'all were under the age of 18, where you would be living. Most people don't want to even think about it.
Yeah, when I found out where you were putting me, I was not very happy.
I forgot, where did I put you?
I'm not going to say it on this podcast because it might offend some people.
Well, he didn't want you getting any ideas if you were going to too good of a place.
That's right.
Like, hold up, I get to go live where?
That's right. Now, everybody's going to say, oh gosh, this podcast is so depressing.
We've got jokes.
Yeah, we got jokes. It may sound grim, but think about what we've said. We've cut up a little bit, but death is something that's going to happen. No one can avoid it. The question that we don't know, even in planning with life insurance, is when. We never know when. And it's something that has to be considered, check this out, April, as part of life.
Mm-hmm.
Because nobody wants to leave their family or their children in a terrible situation. Even though I would be dead and I wouldn't be able to hear or anything like that, I'm sure that if I would have left y'all in a terrible situation, that you would have had a lot to say about it over the years.
I probably would have said some prayers and said, God, I need you to pass a message along.
Yes. Bring him back. Bring him back.
I'd be like, let him know. Let him know.
Yeah. But anyway, things like that we've talked about, life insurance, not trying to put your kids through things. Get a will if you don't have a will. But one part about that I want to throw in, and I'm going to keep it at 100-foot level, is you want to try to keep as much out of probate as possible.
Now, what's probate?
Probate is when someone dies, you have to go to the courthouse and you have to list out all the assets you have and all the cars and all the money and all that stuff, if you haven't prepared like we talked about in some previous podcasts. So to review just for about 20 seconds, all checking accounts, all 401k accounts, all stock accounts, anything that has money, then you want to have beneficiaries and you want to have what they call PODs or pay on death. And all of those checking accounts, stock accounts, everything like that will never go into probate and will never be part of your will. But things like houses, cars, and if you have expensive items and all those things, they will be part of your will if you list them all, which you have to list your house and you have to list your cars. But one thing I want to throw in about the house, go speak to your attorney, but there are things out there called revocable trusts that I would highly suggest that everyone put their homes in. What that does is take the home out of probate so that it's not part of that process that has to go through for about 12 or 18 months. I forgot how many months it is. But it takes it totally out, and in that revocable trust, you can say, I want this to happen if I pass away. And then all those things can take place on your house, and it doesn't have to go through probate at all. And if you put that house in a trust before you get too old, parents, listen at me on this one. Sometimes, like in my father's situation, that's a good example. So my father built his house years and years ago. Remember, he was 42 when I was born. Cost him $7,500. And when he started getting toward the end of his life, the house it was a little old house, probably wasn't worth $60,000. But if he wanted to transfer that house to me before he went into the nursing home or assisted living, I would have assumed the house at his cost basis, which would have been $7,500. If I sold it for $60,000 when he passed, I would have had to pay taxes on the difference. But if I didn't take the house through a transfer and waited to the time of his death, then I don't have to pay any taxes if it was worth $60,000, and I sold it for $60,000. Unfortunately, him and I talked about that. Fortunately, we talked about that, and we gambled. We rolled a dice, let's say. So the first day he had to go to assisted living, he looks at me and says, well, I guess we messed up on the house thing, because now, I don't have all the money to pay for this assisted living, so they probably going to come get the house. I said, well, Pop, that's what you built it for. We gamble. If they have to come get the house, they just have to come get the house. Because at the time, we could not afford to pay, I think it was $2,300 a month. That was 20 years ago. But by the grace of God, I got some money from the VA, got about $1,400 a month from the VA for his service, and I had to contribute about $900 a month. And unfortunately, and this is how he felt, he stayed there 12 months. So invested $900, and when I remember the morning he passed away, and I walked into his room, I started thinking, I said, I bet he's smiling now. I said, well, it wasn't the wrong decision after all. Because that's the type of person that your papa was, that he wanted things to be right. And my point there is even though he did not have a lot, the same things we just talked about before, for looking after your family and looking after your kids, he was doing the best he could to look after us. Even though he didn't have a lot, he put that effort into it to look after us for the best of his ability. So to everybody out there, do the best you can, the best of your ability to look after your family and prepare for things like that.
Because, he didn't have a lot, but he didn't go out overspending or any of those things. And so I think that's another thing for looking out for your family. Think about how you're spending now, and it's not so much about your income, but what you're doing with what you have.
Right. And then too, as you go through these planning processes, you need to consider the ones that are going to be left behind. What is their state of mind? Can they handle a lot? Or are they going to take what you leave them and then go through it, and then now they're going to turn around and ask their brothers and sisters or the parent left behind, I need more money. I don't have any money. And that's one thing that I want to talk about in another podcast, is how to deal with family who are in situations that may need help, but a lot of times they don't really need the help. They need enabling because they don't want to make the proper decisions to change their life to be able to move forward on their own. So we'll save that one for another day. But through all of this, don't be scared to talk about death, because it's going to happen. Make sure you do plan for your time after life, and try not to force your children to accept things and do things that meant a lot to you, that really they would just do it because you meant a lot to them, but it would not be what they would need to do that's best for their life. And on the revocable trust, move that house over there, move it early, because if you get in a situation like my father, if it stays over there, I forgot how many years it is, I think 5 years, then it's no longer part of your assets. And if he would have had to stay there 10 years, nobody could have touched his house. So there's a lot of things out there. I've talked about them from a 100-foot view. Just kind of threw some things out there, food for thought. Dig into them. Send some questions in. We'll try to answer them in more detail, but I just wanted to talk about it so that, first of all, you could get used to it, and then share these things with your family and start doing some planning just in case your time comes up quicker than you thought it would be.
Thanks for listening to the Money Dad Podcast. Head on over to our website, themoneydadpodcast.com, for more resources and to send in any questions that you might have. Do your homework, and we'll see you next time.